Hey everybody, it's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage. With over 20 years experience in the mortgage industry, I've learned there's really three types of people that we work with. The ones that just want to know what time it is, the ones who want to understand how the clock works a little bit better, and the ones that want to know how to actually build the clock. In these videos, I'm going to actually walk you through all three, starting simple and then breaking it down so that you can make smarter, more confident decisions. Now, today we're going to be talking about something that's quietly been one of the biggest deal killers in real estate lately: property insurance. Now, if you've been trying to buy a home recently, you may have run into this: insurance becoming a problem late in the process. Higher premiums, policies getting denied, or deals getting delayed, or even falling apart altogether. Here's what just changed. Fannie Mae and Freddie Mac, they actually updated their guidelines so that lenders no longer require full replacement cost coverage in every situation. Now, what that means for you is more insurance policies are now going to qualify. There's going to be fewer last minute surprises and a smoother path to closing in many cases. And that, my friends, is what time it is. Now, let's go ahead and walk through how the clock works just a little bit. When you buy a home with a mortgage, your lender has a financial interest in that property. So if something happens like fire, storm damage, or whatever it may be, they need to know that the home can be repaired or rebuilt. That's why insurance is required in the first place. Now, historically, lenders wanted something called replacement cost coverage, meaning that the insurance would actually pay to rebuild or replace things at today's prices. But over the last couple of years, insurance companies started tightening up. Premiums have gone up, underwriting has gotten much stricter, and older roofs became a really big problem. Some carriers pulled back in certain areas, and all of a sudden, insurance became a major bottleneck in the transaction. So, what changed? Well, lenders are now allowed to actually accept more flexible coverage options, including policies that use actual cash value in certain areas. Now, that opens the door for more approvals and fewer deal killing issues. But this is where I want to slow you down for a second, because this is where people can make a really costly mistake. Just because something qualifies for the loan doesn't mean it's the best decision for you and your family. Here's the difference. Replacement cost means a full rebuild or replacement at today's cost, where actual cash value means that depreciation gets factored in. So let's make this real for a second. Let's say you've got a roof that's 15 years old. With replacement cost coverage, insurance helps pay for the full replacement. With actual cash value, the insurance company, well, they may say that the roof's already lost most of its value, and now you've got to cover that difference, that gap, out of your own pocket. So yeah, the premium might be cheaper up front, but your financial exposure just went way up. So even with these changes, here's what I want you to pay really close attention to. Roof condition still matters, and it matters a lot. Not all insurance policies are created equal. Lower premiums usually come with much higher risk, and quotes can vary pretty significantly from what you might be expecting. Now, this change removes a big roadblock, but it does not remove the need to be smart. At the end of the day, this is a positive move. It should help more buyers get to the closing table and reduce one of the biggest hidden stress points in today's market. But your job isn't just to get approved, it's to make sure that you're protected after close. And if you need help with this, we've got multiple different insurance brokers, either captive agents or brokers in the area that we trust, that would be glad to help you with this. Now, if you've got questions about how this impacts your situation, or you want help reviewing those options, reach out. I'm always happy to walk you through it. And if you know somebody thinking about buying a home right now, feel free to share this with them as well. It could save them a pretty big headache and a bunch of money. Now, hey, if you found this information helpful, please take a moment to like and subscribe. You can also shoot me a text or email if there's other topics that you'd like to learn about. And make sure you check out the Shoemaker Loan Team on Facebook, LinkedIn, or Google My Business every week for something we call 1 Minute Monday. It's a mortgage rate and housing update that'll keep your finger on the pulse of the market without you needing a degree to understand it. Have a great day, everybody.